All right, guys, are you serious? Are you serious? I'm very serious. And of course, the man, he's not a myth, but he is a legend. Colin Plume from Nova Gold is with us today. Colin, how you doing?
I'm good, Pastor Paul. Always a pleasure to be here. Man, you do everything you can to hold the price down, but you can't stop this unbelievable momentum that we're seeing. I mean, we've never seen. I think the last time that we saw this kind of growth in 1 year was during the Iranian Revolution and the second oil price crisis in 1979. That's when gold also went on a historic run. But we're at 47% gain as of today. 47%.
$4,000 an ounce. You're the man that said it's going to go to 5,000, and nobody believed you. I remember talking to you when it was $1,800 an ounce.
Correct. Yep, absolutely. Yeah, and we were talking when it had that brief pullback. Hit 1,500.
Yep.
So it's been one of those things, and then it's every day. It's like why, and there's a lot of reasons why. There's conviction buyers. People aren't, there's like who's buying gold, and you have these conviction buyers in gold that are central banks. And I will tell you something surprising. The central banks are actually bought less this year at this point than they did last year, and we're still at this unbelievable price.
Wow.
So to hit 1,000 tons a year, you have to be around 85. You need to hit 80 tons, 85 tons. They're at 65 right now per month. So the central banks are actually bought less, yet the price is up 47%. And those are your conviction buyers, right? Those are the buyers that they have to continuously buy for their central banks. It's just part of their operation that they do. They're going to continually buy. So you have your conviction buyers, the central banks. You have your ETF inflows. And those are at historic numbers. And there's not historic outflows. It's inflows. There's people buying dramatic amounts of ETFs. Obviously, you have the retail market. That's a big part of this too. So you have all these things pushing the price. And then I think the combination of the Fed saying they're going to lower rates, they did a little bit. They've pretty much said they're going to do it again. I think most people believe they're going to do it again at the end of this month of October. And then I would say they probably do one more rate cut this year. So you have this dramatic, rate cut, which is, basically makes, more money available, cheaper. And so you have this just historic run. I mean, it's just the roof has blown off gold, and silver has finally started to catch up too.
Almost $50 an ounce. I think it's 48 and a half or something like that right now.
Yeah. So I think listen, it's gold and silver, like a stair step. I think we will have some pullback. So, a lot of people are calling us like, I don't know about buying now. And, it's a fair question. And listen, I respect anybody that has, caution in investing. I mean, that's, really important to do that. And I think that what you have to think about though, is if you've never bought, could you miss an opportunity? I mean, I was talking to a few of our people on the sales team, and they were telling me a few stories of people that they've been waiting it from 2000. They kept saying they wanted to get back. They were buyers at $2,000 an ounce, and they would keep calling. They had money already ready in cash.
Right.
And so they've missed this historic run because they were waiting for gold to get back to $2,000 an ounce. And so I understand there's some caution, but the thing I asked them is, did they buy any? Did they even allocate? And some of them bought none. They were literally just waiting. And I would say that sometimes we overthink an investment too much, in that, I'm not saying you should put all your eggs in one basket, but I also think that to think that anyone is going to time the market correctly every time, that's also, I think, that's not the way to look. I don't know how you look at things, but I don't look at things that way.
It's like baseball. You're not going to win every game.
Right.
But you have to play the 162 game season.
Yeah.
Play the long run.
Right.
It's the same thing with gold, silver, or even Bitcoin, I would say, and even stocks.
Yeah.
What
Yeah.
my question to you is, Colin, and this I know about the 47% incredible run on gold. I'm sitting here today and I'm looking at a stock market at 47,000, gold at almost 4,000,
Right.
silver at almost $50 an ounce, Bitcoin at $125,000 an ounce, a coin. Everything is sky high.
Right.
And the government shut down. We have no indicators. We don't have no
We have no
economic.
idea. Right.
We're running blind right now. Everybody's running blind. When they come out with the numbers, when this thing ends, let's say within a week or so, could we see all of a sudden a massive adjustment on? And if we do, what will get adjusted? Maybe gold and silver doesn't. Maybe it's the other guys. The Bitcoin. And what's your thoughts on this?
Yeah, I mean, I think that. Yeah, I mean, I think that that's the scary thing right now is we don't know. We don't have accurate job data. We're the GDP data. Everything's slowed. Everything's going to be slowed because of the 750,000 jobs that are furloughed.
Right.
Also, the amount of money that it costs us per day to have them furloughed is a dramatic amount.
Yep.
So I think everybody hopes that we get back to work, and also President Trump seeing this as an opportunity to shed some jobs too.
Yep,
I think he's going to shed some jobs in this opportunity, and we'll see how many of them we really needed and how many we were just jobs that were fluff, jobs that just we've had on the books for a long time. I think that it's interesting too when you said the stock market. The stock market, if you looked at April had the most unbelievable, if you look at the volatility index, had the most unbelievable volatility that we've seen this whole year. Right now, the volatility is very low, which means that investors either feel very strongly where it's at, or the job reports are going to come out in the next few weeks, and then we're going to see the volatility index start to move. I don't understand how we will continue to see a stock market at these prices because, based on earnings, it's very difficult for them to justify these prices based on earnings.
Right.
And I think that's the thing that we need to really look at.
It used to be the stock market was based purely on profit and performance.
Mm-hmm.
Now it's potential. Am I right?
Yeah, it's a lot of potential. And I think that the classic portfolio has really changed. I've talked about this on my YouTube channel that Morgan Stanley even came out and changed their portfolio allocation that they recommend to clients. And so, the typical allocation was like equities, bonds, fixed income. And now actually, Morgan Stanley's recommendation was equity 60%, 30% was portfolio mix of it'll come to me, and then they actually recommended 10% into gold, which was the first time that they recommended that.
Yeah.
And if you go back the last few years, the typical portfolio with all equities and all bonds has actually performed much worse than a 10 or 15, 20% allocation in gold and silver and alternative investments. So even the big houses are starting to kind of see a different way of doing things than they've seen in the past. And these are from, the traditional Morgan Stanleys and the Schwabs. Right. They're recommending a different strategy, which is fascinating to me because as someone that's been in precious metals for 17 years, I think they almost would never recommend gold, or if anything, they would say maybe 1% to 2%. So the fact that they're recommending it, I think, is they are anticipating that volatility to shift. I think they're seeing that, we've had good 5 months of low volatility, but I think we're going to see high volatility again. And there's going to be some bumpy, roads here in the market, a lot of sell-offs. And so they just, they're saying like, be careful as we get through this new norm, because, the Fed has acknowledged that they have an issue. The big issue that they're going to focus on is jobs. They've made jobs a bigger priority over inflation.
Yeah, they've made that bigger than inflation.
And that's a big cultural shift for them.
Yeah.
So even though inflation's in the high 2s based on their numbers, they're not going to just wait on rates. They're going to cut rates. In a typical Fed environment, they would probably wait because they want to get back to 2% inflation. So they've also made it a priority to get jobs going again. So I think it's going to be really interesting this last quarter of this year if we see that volatility start to spike. And for people that have that traditional all in equities, and we're seeing it too in Noble Gold. We're seeing a lot of people are going, you know what, I did great. I'm really good. I'm going to diversify now. I'm going to get some gold and silver. I'm just going to hedge my bet. And it goes back to what I said earlier is like, yes, seems higher and it seems more expensive, but also you cannot predict the market. And, if gold got to $5,000 an ounce next year because of everything the Fed's doing and all the debt and everything happening, are you going to beat yourself up because you didn't buy it at this price? And that's what I think a lot of people are going to, is that they thought gold was just going to stay at 2,000. And I remember at 3,000 they thought, but the headwinds there for gold are very strong, is because really a lot of the market, the precious metals market, is being pushed by these conviction buyers. And the thing is, the good thing about conviction buyers in anything, in any world, conviction buyers are typically buyers and not sellers. And that's what you really want. You want this person that's convicted into gold, that just buy, like me. Like, I've never sold any of my gold, right? Over all of these years, I've just held, and I see an opportunity, I just continue to buy. That's what the market is being pushed by today. That's what's happening in the market. That's why gold is going up, is it's conviction buyers continuing to jump into the market.
Wow. So that's some really, that's some really good foresight. So you think in the next 12 months, we're going to see interest rates going to keep going down.
Yeah.
The housing market then should actually really kick into gear. People start selling homes more and more get built, and people be
correct.
And more. Do you see job growth also in the year?
I do. I think it'll happen second or third quarter next year. I think it's going to take some time. I don't think you're going to see it happen kind of overnight. I mean, what we have a real shift in how jobs are today. We're losing some jobs to AI, and then there's some massive opportunities.
We're creating jobs with AI.
Right. Right. And there's some states that are doing well, and there's some states that are, the Moody's just came out with a report that they think there's 22 states that are on the verge of a recession. And that data is based on a lot of these states are on the left. These are the majority of the states on the left. And it's because they haven't caught on to the idea of creating an infrastructure for job growth and tax advantages. But I do think that the tide is turning, and you're seeing it in a lot of places all over the globe. I mean, people in different parts of the country are up in arms because their government hasn't enticed industries the way that Texas and Florida and a lot of these states have. And, there's states that have really done a good job, of just focusing on strong job creation industries. One thing is, obviously everyone's talking about AI, but it's like, how do you deal with AI? A big part of AI is data, right? And so you have states like Texas and North Dakota and Tennessee that have said, come here, we'll give you tax breaks, because they realize there's an opportunity in that space. So even though some of the jobs got taken away, they still need to build these data centers. They still need to house them and maintain them. Those are jobs. Those are job creation. So there is job creation happening out there in industries based on the industries that are growing. And so, that's something that's pretty interesting too. Also, I saw a report from JP Morgan last week that they were saying almost 90%. And this is, always being cautious is important, but they were saying over 90% of the investment dollars that have gone into AI has gone to zero actual growth. So there's the majority of the AI investment
hasn't made any money yet.
Has not made any money at all. And you've seen it. So Burger King good example. I don't know if you saw, they're just a small part of this, but basically they tested AI in their drive-thrus. And what happened was the AI didn't recognize, like, some lady tried to order 18,000 cups of water. and the AI just like lost its mind.
Did AI try to do it? I mean,
I didn't get that part of the story, but it's funny because I heard, I heard this on the radio with my 9-year-old in the car, and he asked the same question, like, what happened? Did the AI just start? Did it turn? The robot come and start pouring all these, and he's like, what? Why didn't the AI know? And I was like, well, it's because that's the one thing is like you have to build in this sort of common sense idea that and you have to teach it, right? You have to teach it
common sense. Now I was thinking about that because where they get a lot of the data is they follow everybody online. They follow people and how they react to things. So you're looking for common sense for AI. There may not be a lot of it out there. Okay.
Right,
I'm just saying AI is like, man, I don't know what to do because nobody else knows what to do if there's 18,000. But I guess let me ask you this then. So with this situation developing, to me, gold still is important I don't see it falling. The next year, I don't see it going down. I see it still as this safety net that will grow. I mean, it could be another year where we go from 4,000 to 4,500, 4,700. Could that be next year? Or
I think the only way we see it really pull back dramatically would be a situation where either we made massive cuts to our spending, which we're not, because we're shut down right now. I mean, we're in a shutdown because we overspent, right? I mean, we don't have enough money, and now we have to allocate more money to the government. So, and this seems to happen every 3 months now, right? I mean, every 3 months there's a potential government shutdown.
Because of our interest. I mean, how much are we paying in interest on the debt? It's just outrageous.
Unbelievable amount. Yeah. I mean, it's a big part of our line item of our budget now is just paying the credit card debt. I mean, the government's becoming very similar to what like college kids are going through, right? All this debt that they have, like they have this on the books for 30, 40 years. We're in the same boat right now as a country. To go back, I was talking about AI company. There's a company called Stargate, cost $500 billion, and they think they've only gotten about 10% of that $500 billion in terms of like actual return on money. There's all these AI, and so to go back to the stock market, not to tangent too much, but like, a lot of the Magnificent Seven growth is based on this idea that all these AI projects are going to work, or some of them are going to work. And as we know, a lot of them are not working. A lot of companies are going back to the drawing board and saying like, it's not working as the way that we wanted it to work. And so, I think that there's like so much money of people that are trying to create these companies and programs that make life easier. And I think at some point there's just too much money going after it. Very, very similar to like the gold rush, right? Like there was just too many people trying to go after not that much gold. And really the only people that made money were the ones selling the shovels and owning the saloons, right?
Yeah.
And I think we're seeing that in AI right now. We
saw this in the early, late 1990s, early 2000s when there was the .com era.
Correct.
Massive amounts of money went into IPOs.
Right.
8 out of 10 failed, but the 20% that hit went skyrocketed and made guys like Bill
Gates and all these,
and the guy that owned
Larry Ellison
made a ton of money.
Yeah. All these guys. Yeah.
These guys. But
they made
a lot of these .com companies crashed and burned. I think there's going to be an AI bubble. I'm calling it the .com bubble. I see an AI bubble.
Yep.
Same thing. But there's going to be some big winners.
Yep.
A lot of little losers. Okay.
Yeah.
And but it'll shake out. That's what the free market is. I think that's the free market.
And if you're a creator or an entrepreneur and you can have 20 failures and one go 1,000x, you're willing to take that chance. Now, the problem is that there's a lot of investment money going into those things. That's money from individuals like us potentially, right? Like they're
Right.
investing money into it. So you really just, that's the thing you have to be careful. And it's like, you see all these new investment scams, that are just growing. The amount of investment scams. I saw this one, there's this famous YouTuber that he did all these courses. He was like the first YouTuber, this guy named Ty Lopez. And he had this idea where he was going to buy all these brands like Radio Shack and all these things. And he was going to buy these failing brands and then make them successful because he was like, very successful on the internet. Well, it turns out he was allegedly running a Ponzi scheme. Yeah. And this guy raised $250 million. And it's all from just investors, individuals. Like they have the list of the people, it's some guy with 50,000. I saw a guy with 2 million in there, like all these investors that dump their hard earned money into these things. And so that's part of this too, is that like, you really, you work so hard, you really have to be careful because like this guy, I don't know, maybe he goes to jail, maybe he doesn't, but he just came up with an idea, raised the money. He didn't put his own money in.
He used everybody else's.
Exactly. And using other people's money. And so this is the thing that I see so often is that like people like, oh, I missed this great, good company. I'm going to invest in this so I can get that unbelievable return. And so that's the thing is like this people of, this fear of missing out of these unbelievable returns, or do you just go the slow and steady route? Right. That's the key, Pastor Ball. It's like certain things, investing is a slow and steady way to build wealth. That's what precious metals is. It's one piece of the slow and steady pie. And we're not always going to have a 47% up year like we are right now.
There's always some pullbacks.
There's always going to be, and those are the times you continue to buy in, right? You continue to buy. But you stay in the game. You find assets that are going to go up over time, and you stay in the game, and you dollar cost average. So maybe some people today come in with a little bit of money because maybe it goes to 5,000, or maybe, and then you wait. Maybe you get a pullback. Maybe goes back to 3,500, and you buy a little bit more. But what I've seen since I've been in the business, especially this time, is that like when you have this kind of debt, it's more like a stair step, and I think the likelihood that we're going to see. Like what happened in 1983, where it just stayed at $300 an ounce. I don't think that environment is here anymore for the gold space because there's just so many conviction buyers coming in to buy it. And then also I would say something
though inflation, the overall inflation automatically elevates everything.
It does, yeah. And then we're seeing the stock market too, right? I mean, we're seeing it everything is just, it just takes more dollars.
It just takes more dollars.
Yeah, exactly. And that's a reaction. And there's been nothing, and I like what President Trump's doing, but I will say this isn't, like President Jackson, where he's going to get our debt to zero. Like he's pushing the envelope, right? He's pushing the envelope to grow the economy, and the way that his plan is a spending plan to grow the economy. And we haven't slowed down in the spending in any way. So as long as that debt's going to continue, I think gold will do really well. So I think it's an interesting economy that's happening. There's a lot of growth. I think that this fourth quarter is going to be really telling. Will there be like some big, massive companies that have some big sell-offs and some bad quarters? I think so. I think a lot of the wealth in the stock market has been built on this AI. And even though all these things are coming out, that most of these things are not working, it hasn't translated yet to the stock market. But I do believe that it will eventually translate into poor earnings. And I do think that there will be a pullback because of those things. Now, there will be sectors that will continue to grow and do really well. But I do think a lot of the wealth has been built in tech. And that's where some of these massive gains have been. And so I'm very wary of that right now. I'm very, concerned just because it just doesn't see. I mean, you look at Apple, even this new iPhone that came out it's nothing different than the last iPhone. They're not bringing anything new. There's nothing.
I think they just stuck an extra, instead of 2 cameras on the back, is 3. I mean, I don't know what. Yeah. But I will say this. There were some folks that was over at my house yesterday, and they came, and their Tesla dropped them off at the front door here. Then it went down the street and found a parking spot and parked. Then when they wanted to leave, they told it on its phone, and it pulled out of the parking spot, drove up to my front door, and picked them up.
Come get it. Okay, well,
I said, okay, that is impressive. Okay,
that's the chauffeur service that everybody's looking for.
That's unreal. But okay, so if you're investing in Tesla, let's say, and I don't think it's on the market. I don't think he's on. Is he on the market?
Oh yeah.
Yeah, they are. Okay, so if you're investing in certain companies that are performing, you will see growth. But you can't just throw your money at anything because it says it's AI. I mean, you better.
There's got to be. And by the way, I mean, that's cute and that's a fun use. I like it, but I can walk. I'm just saying, I can walk down the street. It's okay to walk once in a while. You live in Florida. You're in a nice place, nice weather. I'd like to walk. Yeah. I'm just saying, like, what is that? Does that solve a problem? That's what I see your point. The idea with AI is that what are the problems that it's solving? Now, I've seen it definitely can solve some problems. You're seeing it in customer service do some great things, and you see it do some bad things. But like, there's only so many uses there potentially. If it made our government more efficient, great. It'd be wonderful. It'd be fantastic if we could, the IRS, I know they laid off, if it could analyze taxes in a better way, a more efficient way, make it better, make it easier, make things move faster there. These are all positive things,
right?
That we need. I don't always see that the technology that people are coming out with actually does solve a major.
A lot of hype. There's a lot of hype right now. Yeah. It's a lot of potential.
Yeah. I still think there's job creation going to happen. There's exciting things that are happening. The one thing is, people are looking, getting second jobs now. That's second jobs ideas. That's one of the most searched terms right now in Google over the last 30 days. So people are realizing, like, I'm only going to make a certain amount here. I got to find other opportunities, and they're looking for ways to do that. And for those people that do that, and they're smart about it, and they build, a different revenue stream, they will see the benefit of many things, including tax advantages. There's a lot of tax advantages in these second incomes that they're going to get. So people are starting to open up their eyes to it. But I think that the idea that this AI is going to fix everything or solve every problem is not exactly true. There's still a lot of problems, and I think we're over invested there. I would be very cautious of it. Exciting thing for me is, the story we've talked about a lot is just silver. Really, I think silver's, one of the great stories this year. Yeah, no, absolutely. My book, Silver's the New Oil, still on Amazon, still, I think it's at 25 right now on the Amazon commodities list.
Great.
And I was actually funny. Before I got on, I was reading one of the reviews of the guy. Some guy was saying, it was like, his argument was, I only made one argument for silver, that the only way silver would go up is that we used it for EV, and we used it for solar panels. Which entirely is not true. I make many different arguments in the book about ways that silver, and I was reading some, you have these people that just don't want to see things that are available to them. And in my book, I really go through, and one of the things that I do have that I talk a lot about is the government use of silver has really skyrocketed over the last 5 years.
I didn't know that. Really?
Yeah. And actually, in the last 30 days, Russia and Saudi Arabia bought $150 million in silver. It's the first time that they've bought that much silver in over 100 years.
Wow.
And they bought that for a lot of the things that I've been talking about, the data centers and the technology, also, drones.
Is part of it for defense. I was getting ready to say, isn't that a lot of defense?
Absolutely. But yeah, Russia and Saudi Arabia for the first time. And Russia has even alluded that they want to make it some part of their core holdings is having silver. Yeah. So you have these two major countries jumping in, buying silver. So yeah, for anyone that wants to get my book, call us. We can give you a code on Amazon. We can give you a discount.
You got a copy of that there, don't you? Hold on.
I got a copy here somewhere. Yeah, I got a copy of the book.
Silver is the new oil.
Yeah, silver is the new oil. Here's the book here.
There it is.
Easy read. I finally read it to my 9. He was 8 when I wrote it. Now he's 9. My 9-year-old son, Max. And he said, he's the tough critic. He said it was decent. Yeah, that's what he said to his dad. He said it was decent. So
I'm proud. It was funny. I had somebody on. We were interviewing my son, Paul Jr. and I were interviewing somebody, and Paul said, "I read your book in 10 days," And then he said, it took me 10 months to read my dad's, but I read yours in 10 days. So if your son, if you're ready, can get your book read to your son who's only 8 or 9 years old, that's great. Okay.
Yeah. Well, we read it together. I wanted to go through and then, it was sweet. And then he wanted me to show, cause I have 3 kids. So I have gold and silver set aside for all the kids. So we went through the coins and I have mostly bullion, silver eagles and stuff like this.
Yeah.
And I have some junk silver, that he likes, is fun. And then I have, some older coins. Like I have what is this? This is an Indian head, $10 Indian head from 1926. Nice. So I have a few of those set up for them also. And we kind of went through and, he asked me what they were 5 years ago, what they were 10 years ago, and why is this part of his portfolio? And why does he have these things? And it was really great. And actually he got some money recently from somebody, and he told me he's going to buy a little silver on his own for the first time.
Good.
Which was, I will say, he liked it. And that was a big step for me because in essence, it was between that and Pokemon cards. And so he decided
trying to figure out, well, you never know. Pokemon cards may have some high value too. Remember,
it's true. Yeah.
I have a first cousin that lives down here in Florida who, when we were both 13, we started buying baseball cards. But then I quit, okay? Lost mine, threw them away, whatever. He didn't. He has every Major League Baseball card that's ever been made since 1951.
Wow.
That's by everybody.
Oh,
he has 7 Nolan Ryan rookie cards.
Wow. Yeah, I love Nolan.
So in his house, he has a room where he puts steel in case the house burnt down, okay? This thing is a vault. That way it won't burn, and you can't get in it either. Okay, you can't rob it. It's almost $750,000 worth of baseball cards, and I keep saying to him, because we're both in our 60s. I'm like, are you going to sell the cards? I mean, what's the plan?
Right.
Said, I love them so much. He pulls out his Ernie Banks and his Willie Mays, and he goes,
well, it's, you know what? That's, and I'm happy he made money. You hear about these guys that, I will tell you, the Pokemon cards we've gotten for our kids, they say they're worth a certain amount. I've tried to sell them. They're never worth what I need.
They're never worth.
They're never worth. But
buy the gold, folks. Just buy the gold.
Keep it simple.
Biblical. It's a biblical currency. Okay.
Exactly. Keep it simple. Yeah. All right, Pastor Paul. Well, I appreciate it. Anyone wants to learn more, we got some great promotions going on. You got an IRA, old 401k. Give us a call. You're going to like, who you talk to. Friendly people, we're here to help. So if anybody's interested, give us a call. We'd love to help you out, get started.
You know what to do, folks. And you can pick up the phone and call them at 877-646-5347 or go to PastorPaulGold.com. Go to Noble Gold. Get it. Get with it. Stay with it. And you'll be glad you did. So, Colin, as always, are you a Dodger fan?
Oh, yeah.
Oh, yeah. Okay. Oh, man, I tell you, they look good. I'm a Cub fan, so, have mercy. But don't worry, we're not going to get past the Brewers. Okay, we can't beat the Brewers. But good luck. I really love watching Showtime play. I really love watching him pitch and hit. Oh, my God, he's the best player ever.
I know. Unbelievable.
All right.
Thanks, Pastor Paul. Take care.